Good morning. It's Monday, the 17th of February, and this is Govindraj Ethiraj, headquartered and broadcasting and streaming as always from Mumbai, India's financial capital, enjoying its last few days of cool weather. The take. It must be a matter of some irony that even as the Trump administration was attempting to thrust a Lockheed Martin F-35 jet fighter down India's throat, figuratively speaking, of course, a video of a Russian Su-57 fifth-generation fighter jet doing lazy reverse and side thrusts at the Bangalore Aero Show was going viral last week. The Su-57's flying was so effortless, someone on a group chat remarked, "It was like hold my vodka while I show you some few cool moves." It helped or did not that the test pilot was Sergey Bogdan, all of 62 years old. Quite like Top Gun's Maverick, played by Tom Cruise at 57 years old. That's in the film when he was 59 when the film was released 3 years ago. And the Top Gun connection? Well, Bogdan claims that some of these moves, one being an intense nose spin in the film Top Gun, were inspired by Russian dogfight procedures. So the F-35 Lightning II was in Bangalore too and put on a handsome display by all accounts, but there was no viral video since these things are often an indicator of popularity or sometimes even existence. So while India buy F-35s because of Trump's insistence, well, we obviously don't know, but it seems unlikely, at least now. It's also a fact that India's defense requirements are quite tightly interlinked to Russia, as we all know, and have been so for over 60 years. It does seem that coming out of a meeting between President Donald Trump and Indian Prime Minister Narendra Modi, that there is no immediate threat of a blanket tariff on Indian exports to the US, as Trump is now talking of reciprocal tariffs, which is country by country and would take time to work out. By the way, columnist Shankar Iyer points out that the reciprocal tariff threat is mired in complexities. The US harmonized tariff schedule for 160 countries is spread over 98 chapters and has over 18,000 10-digit codes for imports. Imagine its implementation in the backdrop of the promised purge by the Department of Government Efficiency, or DOGE. The US has a roughly $45 billion trade deficit with India, and the US trade-weighted average tariff rate, by the way, is about 2.2%, while India is 12%, which is obviously higher than what it was a few years ago. It's instructive to see how tariff wars could play out. The Indian alcoholic beverage industry has fired what could be the first shot by saying that the government's move to reduce customs duties on bourbon whiskey imported from the US from 150 to 50% should lead to states in India also withdrawing excise concessions on imported liquor. Now, this is because lower customs duties would lead to cheap imports and thus hit producers of premium whiskies who are obviously paying high local taxes. You can expect and imagine similar scenarios across other industries where India has cut import rates or will do, and similarly playing out in the United States as well, though on the other end of the spectrum. In the US, tariffs will push up prices and make it difficult for local US manufacturers who are, let's say, importing bulk drugs from India and converting them into medicines for retail. Now, the trade dynamics and shifts are not unusual, except that it is happening all at once for scores of products. And the worst is the uncertainty and the daily threats and the shifting goalposts. So it's not very clear when this trade deal between India and America, or rather how it could look like, despite its stated goal of more than doubling bilateral trade to $500 billion this decade. Or does that mean in a decade? Anyway, India has promised to buy more defense equipment from the US, energy among other products, and some of those moves have already begun happening for energy, for example. And of course, allow for cheaper whiskey and high-end Harley-Davidson bikes. And maybe Tesla cars with little or no import restrictions, since what must be good for Elon Musk, the CEO of Tesla, must be good for America, and vice versa as it looks from here. India, by the way, just to come back to those numbers, exported goods worth about $74 billion to the US in 24. That includes pharmaceuticals, telecom instruments, jewelry, petroleum products, and garments, among also engineering goods. Ajay Srivastava, founder of the New Delhi think tank Global Trade Research Initiative, or GTRI, and a frequent guest on the Core Report, told Reuters that for nearly 75% of US exports to India, like petroleum products and chemicals, average tariffs are already below 5%. So a trade deal that could scrap duties is unlikely to be a major concern. Maybe there is an opportunity in this, maybe not. On the other hand, American companies continue to expand in India, whether in manufacturing or in services, or to address the domestic market. American pharma company Eli Lilly last month announced it was opening its new Global Capability Center in Hyderabad, the second such facility in India, which it said would strengthen its digital strategy and service delivery and employ over 1,000 highly skilled professionals. This will be operational later this year, and the first one was opened in 2016. While Trump and his team would continue to use a carrot and stick approach as they have demonstrated in negotiating with nations like India, American companies obviously continue to do what's best in their interests and in the interest of their shareholders, which is to invest in the Indian market and its people. So while a 62-year-old Russian pilot with some crazy maneuvers might rightly wow Indian netizens and maybe help clinch a few more defense deals, the rest of the sky is quite wide open for both India and the United States. And that brings us to the top headlines and themes of the day. The Indian markets fall below $4 trillion. They had hit $5 trillion in May last year. China has gained over $1.3 trillion even as India lost $760 billion as funds rotated back to China after DeepSeek. What was India hoping to achieve at the India-US trade talks? And why heart failure therapies and diuretics are lifting the growth of the cardiac drugs market?
This is a Core Report with Govindraj Ethiraj.
The markets fall below $4 trillion. Last week was not a memorable one. The interesting thing is that we've seen sudden falls in the stock market starting in 2020, or at least most recently in 2020, and thus are not so accustomed to gradual and steady declines and what they might represent. So last week saw consistent declines on top of previous weekly declines, which in many ways are more worrying than sudden and dramatic falls and, of course, reversals or recoveries, just like after the election results in May 2024. Speaking of which, most of those gains after May 2024 are now lost. India's stock market capitalization has now dropped below the $4 trillion mark for the first time in more than 14 months, thanks also to the weak rupee against the US dollar. It was over $5 trillion in May last year. The Nifty Small Cap 100 index has now formally entered the bear phase on Friday, with the index slipping around 22% from its peak of 19,716. It was down about 4% on Friday, and the major indices, however, took less of a beating, recovering and fighting back to some extent. The PSE Sensex closed about 200 points lower at 75,939, while the Nifty 50 index was down 102 points to 22,929. The broad market indices are trading at higher valuations than their long-term averages, is a point to note if you are looking for some silver lining. The small cap index is trading at a forward 12-month price-to-earnings ratio of 24.5x, well above its 10-year average of 16x, according to brokerage Motilal Oswal, quoted by Reuters, which also added that the mid-cap index P ratio at 35.8x is way above its 10-year average of 22.4x. In contrast, the benchmark Nifty 50's price-earning ratio of 19.9x is just below its 10-year average of 20.6. So there you are. The Nifty 50 is quite fairly valued at this point. Gold prices, meanwhile, have slowed down. That is, the rise of prices have slowed down, but it was on course for its seventh consecutive weekly rise, the longest since 2020, according to Bloomberg, thanks to continued buying from central banks, including China, many of whom are obviously, when I say many of whom, I mean central banks are obviously trying to hedge against the uncertainty in the global trade market. DeepSeek is diverting funds. DeepSeek's breakthrough in artificial intelligence, or AI, is helping drive a rotation of stock funds back into China from India. Hedge funds have been piling onto Chinese equities at the fastest pace in months, thanks to bullishness on the DeepSeek-driven technology rally, on top of hopes for more economic stimulus, according to Bloomberg. In contrast, India is seeing a record exodus of cash on concerns over waning macro growth, slowing corporate earnings, and expensive stock valuations, all of which we've just discussed. China's onshore and offshore equity markets have added more than $1.3 trillion in total value in just the past month. Amidst these reallocations, while India's market has shrunk by more than $720 billion. The MSCI China Index is on track to outperform its Indian counterpart for the third straight month, and that's the longest such streak in 2 years, says Bloomberg. Analysts told Bloomberg that DeepSeek has shown that China actually has companies that are forming a vital part of the whole AI ecosystem. And one of them said that his firm has been adding Chinese internet holdings over the past few months while trimming smaller Indian stocks that had run up way past their valuation multiples. US resumes LNG exports. US President Donald Trump's administration said on Friday it has granted a liquefied natural gas export license to the Commonwealth LNG project in Louisiana, the first approval of LNG exports after Former President Joe Biden paused them early last year, according to Reuters. These exports are approved to go to markets in Asia and Europe and presumably India. Energy Secretary Chris Wright, whose agency is responsible for approving those shipments, said exporting US LNG strengthens the US economy and supports American jobs while bolstering energy security around the world. And some of that is applicable right here in Europe, where the US is now apparently trying to increase LNG exports to help reduce Europe's dependency on Russian gas after Moscow's invasion of Ukraine. Trump ordered that lifting of the freeze on LNG exports on January 20th, the day he took over. Commonwealth LNG wants to build a 9.5 million ton export plant in Louisiana to sell to countries that do not have a free trade agreement with the US. Decoding the US-India trade talks. India and America agreed on Thursday to start talks to freeze an early trade deal and resolve a standoff over tariffs following India's promise to buy more oil, gas, and military equipment and, of course, fight illegal immigration, according to Reuters. Now, specific steps on energy purchases and reducing imports from the India side have already been kicked off, as we've been discussing. The series of agreements emerged after talks between Trump and Modi at the White House just hours after Trump railed against the climate for US businesses in India and unveiled a roadmap for reciprocal tariffs on countries that put duties on US imports, Reuters reported Trump saying. Prime Minister Modi recently announced the reductions to India's unfair, very strong tariffs that limit us access to the Indian market very strongly, Trump said, adding that, and really, it's a big problem, I must say. Now, the deals to resolve trade concerns could be done within the next 7 months, according to India's Foreign Secretary, once again quoted by Reuters. And a joint statement welcomed India's steps to lower tariffs on select US products and increase market access to US farm products, while seeking to negotiate the initial segments of a trade deal by the fall of 2025. I reached out to Indrani Bagchi, CEO of Ananta Aspen Centre, a foreign affairs think tank and also a columnist with Times of India on diplomatic issues. And I began by asking her, what was India hoping to achieve at these talks with Trump and what did it actually achieve?
One of the things is, as you know, Trump has come in as, the only description I have is an agent of chaos. So the unpredictable, he's been slapping tariffs all over the place. But we also know from the last time round that what Trump really wanted was a trade deal with India. It didn't happen because of Indian sort of tardiness or, how it ended with tensions between Commerce Minister Piyush Goyal and Bob Lighthizer. The same team is back. Bob Lighthizer is no longer USTR, but far more powerful actually, because USTR itself has been demoted, so to speak. So the reason for going in early was to signal to Trump that yes, we are a high tariff economy, as Trump has repeatedly described India, but we are also willing to step beyond, make a deal. So you saw a couple of sort of confidence building measures in the budget with reduced prices on bourbon, reduced tariffs on bourbon, on Harley Davidsons, such like, and a very clear message that they would actually get a trade deal done by the end of this year. Since you know the entire business economic landscape so well, you know what kind of a mountain that would be for Indian negotiators. But there is very clear political intent that they want to get a deal out by this year. Now, the second reason for this is also to reduce the unpredictability of the whole Trump-India relationship. When you do a trade deal, things become predictable, it normalizes. And the third reason is the Indians also want market access. They're also looking for market access. The Americans, of course, are looking for market access, lower tariffs, etc. And one of the things that India hopes, I think, to put into a larger trade is not only tariffs, but also a technology access, a technology alliance that can go into the deal and a mobility provision. As one of the people in the Trump meeting said later, that, there are some 300, 500,000 Indian students paying full top dollar fees, tuition to American universities. Why should that not count as an economic sort of service, or I don't know how you describe it? So this is something that you will see put on fast track. And I think that will be very interesting to watch, certainly in the next few months.
There are 2 points that the Trump administration seems to have highlighted. One is defense equipment and that India should buy more. And the second is oil and gas. I think the oil and gas part seems a little easier because India is obviously constantly in the market, including for gas specifically, and we will buy. And we've already been buying more. How is that likely to pan out? Because that is something that India has already, let's say, had conversations, is having conversations. There are deals and will for years now. Is that likely to shift things around, or how does that work?
So one of the things that India has also made a point is that, we would like to buy more of your stuff, but you make it insanely hard for us to do so because your bureaucracy, the US bureaucracy, is actually far more hidebound and fossilized than even the Indian bureaucracy. And in fact, the defense ministry in the last few months has actually changed its procurement rules. But a lot of what India also is looking for is to tell the Americans that, we will buy the Striker, the Poseidon, P-8I Poseidon, surveillance aircraft.
F-35, of course, the big one.
F-35 we cannot get. I mean, we'll talk about that. F-35 is, let's say, a bridge too far at this point. We need G414 jet engines for the Tejas too. That has been delayed by the US. That is something that that India is very keen to get, to put on the fast track. We are willing to pay big money on this. So it's the American side. As for the F-35, there will be a problem because we have the S-400s from Russia. And there is an automatic target detection of the S-400 is the F-35. So that's going to be a bit of a...
Just to come back on this point, you said that the delays were on the American side. And why is that? Is it because of perceived, is there a sanction element here?
No.
Or what's the
No
reason?
sanction element, because the G414 jet engines, that the deal had been done with the Biden administration some time back. It's basically American bureaucracy that's at work. That's not, they invent all sorts of reasons, but it's bureaucracy at work.
But you're saying Boeing can strike a deal to sell it to India on an Indian company.
Boeing has already done the deal. That deal is already done. It needs Pentagon clearances. That deal could go.
Indrani, you've also passed through the Munich Security Conference and happened to meet most of the dramatis personae who are involved in these Modi talks, as well as the being in Munich where there was a lot of interesting developments and statements being made. So your takeaways from an India lens?
Biggest takeaway is this is an era of upheaval. We are actually watching history in the making, where Europe is stunned, shocked, apoplectic with outrage because the Trump administration has made it very clear that they are not picking up the bill for the Europeans any longer. So there was a lot of hand-wringing and a lot of soul-searching among the Europeans. And in fact, it was a fully European navel-gazing 2 days. But very clear takeaways from the defense secretary, who did not come to Munich, but from J.D. Vance, who did, that they're looking for an end to the war with Russia. They're looking for, and if that means compromises have to be made, the Europeans have to suck it up, literally, because the European position has so far not been to look for an end to the war. They would just want Putin to disappear somehow. Go back to, and anybody who has looked at the world knows that Putin is not the first leader, not the last leader to invade another territory. The point is, how do you get to a peace deal that makes it impossible for a war like this to happen again? The Europeans are taking a maximalist position. The Americans have said nothing doing because we are bankrolling it and we don't want to bankroll this war any longer. So Zelensky was there telling everybody that we will not be able to survive without American support. So very clearly, NATO membership not on the cards for Ukraine. Europe will have to foot the bill for both security, whatever security guarantees that Ukraine asks for, and rebuilding Ukraine. Although, as a real estate developer, I'm pretty certain Trump is looking for a lot of good deals on that front.
And last question, anything specific that stands out from an India point of view, Indrani, on this particular? Yeah, from Munich.
We are in a good place. And as long as we stay sharp on very clearly articulating our strategic aims, and we've been at it for a couple of years now, this whole idea of multipolarity, the multipolar world is here. We are a pole and we have to, we now just need to acknowledge that, yes, this multipolar world has come. It's no longer out in the distance. It's here now. So we should be playing our games. Like the Gulf is a big place. And in fact, I'm just going to add this to one of the biggest takeaways from the Trump Modi summit has been the reaffirmation of the Western Quad called the I2U2, that is India, UAE, Israel, and the US. The I2U2 and the IMEC, which is this economic trade technology corridor between India and Europe. That was very much a part of the summit meetings between Modi and Trump. It was something that the Southern Europeans are very interested in. And so my sense is the next war that will be targeted is the Gaza war, because that's the only impediment to the IMEC that goes through. In fact, IMEC is, if once it comes down, it'll change the entire landscape forever.
Right. Indrani, thank you so much for joining me.
Thanks, Govind.
Why some subcategories of drugs are more critical than the others? Sales of drugs are usually classified in broad categories like cardiac, gastrointestinal, pain, anti-infectives, and so on. All these categories are large and growing fast, though in some periods there are subcategories within them that grow much faster and then obviously lift the broader category. Understanding which subcategory of drugs is driving sales is a good way to understand shifts in the pharmaceutical industry, in brands, and importantly in disease profile, and thus how we could be possibly more forewarned in our own daily lives. For example, heart failure therapies grew 18% year on year last month, while diuretics grew 17% under the cardiac category, while anti-thrombotic agents grew 18%. On the other hand, under gastrointestinal drugs, oral electrolytes and probiotics grew 26 and 24%. Under vitamins, appetite stimulants grew 32%. Under pain, drugs for rheumatoid arthritis grew 23%. So while this obviously lifts the pain category, it is useful and perhaps insightful to know that arthritis, or rheumatoid arthritis to be specific, is driving a good part of it. Similarly, in neuro or central nervous system medicines, the anti-Alzheimer category grew 15%, and in the derma category, anti-dandruff grew 20%, which is of course interesting. Now, some of this could be seasonal, but some not. All these subcategories have sales of more than 200 crore rupees annually, according to Pharmarack, the pharma intelligence tracker. I spoke with Sheetal Sapale, Vice President at Pharmarack, and I began by asking her to talk about the trends she was seeing in these categories, and more importantly, what were the numbers telling us?
Since cardiac category is one of the biggest category and the fastest or high growth category that we see today, it also reflects the growth of lifestyle diseases that are happening in the market. So what I'm gathering from this is the cardiac categories, it's not just the antihypertensives. In cardiac category, antihypertensives contribute to almost more than 50% of the cardiac category. And hypertension as a condition is something which naturally happens as one ages. So that may be a age related aspect and to some extent a lifestyle related aspect. But then if you look at other categories within cardiac, where you require lipid lowering drugs, anti-anginas, heart failure therapies, they are more critical and they are more of increasing lifestyle disease and impact of those deteriorating lifestyle and impact of that happening on the people's health. When we did analysis of these areas, the problem seems to be pretty serious, because if you see, these categories are growing double digit, not just for the month of January, but in this last whole year. If I were to look at the MAT growth of these categories, even at a MAT level, these critical categories have grown by double digit. So it's not just over last month that it has grown high, but then over last year, these conditions have increased significantly. That is what I tried to highlight beyond the chronic thing, something which is impacting the overall health of the masses within the country.
So you're saying that lipid lowering drugs and heart failure drugs are being consumed at a dramatically higher level than 23. That's one. So I'll come back to that in a second. Some of the other categories that you've looked at is gastrointestinal, where you're saying, for example, probiotics has seen a huge jump. So again, my question in this case is, or oral electrolytes. So why is the jump seeming so sudden? As in, I can understand a gradual rise.
Yeah, so this is again a seasonal pattern. Antidiarrheals is a condition which usually one sees in the monsoon season. Okay, But then if you look at the festive season of India evolves, if you see in the month of December, Jan, this is a period where a lot of marriages happen, a lot of festivities do happen in this country. And this again correlates with a lot of eating outside and leading to conditions like diarrhea or a lot of loose motions where you need to consume a lot of probiotics, a lot of oral electrolytes come into picture. So this is what is getting reflected in the growth of these categories.
Right, but it's still higher than what it was the year before. So the same conditions would have happened at the same time of the year or season in the year before as well, right?
Yeah, the consumption definitely has improved. Our consumption has definitely increased as compared to what it was last year. Also, it is not that anything new or new activity has happened in the market, because in majority of the cases, this growth is because of some existing older products and no new introductions that have happened in the market. So these are sort of OTC products where, or almost OTC, OTX products whose consumption has improved.
Another segment that seems to have grown quite rapidly is rheumatoid arthritis under pain. So again, why the sudden jump there?
Rheumatoid arthritis, again, if you look in winters, arthritis is a condition which aggravates in winter season. And that is getting reflected in the growth in the rheumatoid arthritic category. Also, certain products which have come in the market, MABs, the TINIBs in the market, which are, little newly introduced molecules in the market, which have also driven the growth of this market. Since they are biosimilar or biological products, in terms of value, they are on a relatively higher side. That's the reason why they have pushed the value growth of the market also well.
Some of the other categories are appetite stimulants. That seems to have grown quite heavily. So why are people eating more or trying to eat more? Or?
Appetite stimulant, it's again a sort of, I would say, a category which falls more into your tonic category, wherein you are trying to, people who are, or children or adults who are malnourished or adults who really are weak, you need to push them, their eating habits, so that they start consuming more. So that is something which comes in the appetite stimulant categories. So I don't say that people want to eat more, but it's more of a condition where you want to push people who are weak to eat more.
So now, if across the segments, of course, these are very different disease conditions, but across these subcategories, where we talked about lipid lowering, anti-anginal, diuretics, probiotics, rheumatoid arthritis, and you've also touched upon areas like anti-dandruff. What are the biggest categories, and therefore thus reflecting what are some of the faster growing disease conditions or health conditions?
The smaller categories within the cardiac segment, if you look at the lipid lowering or the cardiac drugs, these are the categories, or growth in these categories indicates more critical aspects in heart care that is coming up. When it comes to other categories like oral antidiabetics, the oral antidiabetics as a category is really growing well. One is, many of the products have gone off patent, or many of the critical molecules have gone off patent, and the branded generics are really affordable. So a good amount of switch is happening to these products which have gone off patent. And also there are certain therapies like semaglutide, which is the anti-obesity drug, which comes in the anti-diabetic category, which is picking up well, not just because of its higher value, but in terms of units also, the consumption is relatively better. So this is one category which is picked up really well. Anti-asthma, arthritis, these are also the categories which are very strong category and which indicate many things within the country. For example, anti-asthma or anti-allergics category growing indicates deteriorating air conditions or air quality index. If we keep on reading nowadays, there are a lot of comments on air quality index in certain cities, certain states having gone down, or it has gone down further. So that is again indicated in the increase in consumption of anti-asthma products, COPD products, or anti-allergic products. So there is a complete reflection of how the health parameters and the atmosphere parameters are fluctuating in the country, and how the consumption of different drugs is happening in the country.
Right, Sheetal, thank you so much for joining me.
Thank you so much.
That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.